I'm going to do about 30 minutes on principles of cryptodynamics, which is a word I made up because I wanted a word to do this. And then we're going to have James Chang, who's sitting in the back there, come up and talk about the Bitcoin, and I'll add in as necessary. I've been working as a developer, a maintainer on the Bitcoin for about 5 years. James came in about a year ago, I guess, and started doing technical writing and documentation. Is now doing a lot of presentations. So this is a presentation that I gave for Dev++ before scaling in Tokyo. I keep meaning I wrote it up for the proposal for that, but I haven't written up anything public. Keep meaning to, but I've been traveling so much, haven't had a chance. Yeah, my head's not fully in the game right now because I spent the last 2 weeks in Thailand on a motorcycle. And, but to keep it going, I have that motorcycle out front you saw. It's the same bike, actually. So, what else? Anyway, you can find me online. It's Voskuil in just about every system. Go ahead, next one. Okay, so this term, cryptodynamics, I just looked up crypto and dynamics and tried to make sure that I was aligning pretty well with the terminology that's out there. And this is what Wikipedia says about cryptos. A cryptocurrency is a money that uses strong cryptography to secure financial transactions, control the creation of additional units, and verify the transfer of units. I thought that was actually a really, I paraphrased it a little bit, but I thought it was a really good, surprisingly good definition from Wikipedia. The one thing I would disagree with is it doesn't use strong cryptography to secure financial transactions. And if anybody's read my stuff, you realize that it's people that secure these transactions, not math. And but I won't go too far into that. I just want to cover this idea of cryptodynamics. Next slide. So dynamics, branch of applied mathematics concerned with the study of forces and their effect on motion. So in cryptodynamics, what I'm trying to get to is kind of distill the principles that make Bitcoin and other things that are similar work. And the things that secure it are things that apply force, not math, cryptography. These are things that actually move, things that people do. So crypto and dynamics, we're putting together this idea of cryptocurrencies and forces at work. And one way to think of it is like Newton's laws of motion or the laws of thermodynamics. That's really what I'm trying to get at, like the principles behind these things, what makes it what it is. Next. Okay, so crypto and dynamics, the forces that generally secure financial transactions, specifically by controlling the definition of units and the transfer of units. And it's interesting that even though that was just Wikipedia's definition, these are two separate things that are controlled through two separate aspects of the technology or the system. The definition of the units, which you can think of as the rules, the Bitcoin consensus rules, and the transfer of units, which has to do with confirmation. How is confirmation secured? Very differently than the rules. Okay. Okay, so first of all, I'm gonna give a bunch of background, and then the rest will be fairly straightforward. Conceptually, what is Bitcoin? Okay, so the word Bitcoin is defined by Satoshi in the white paper. So you kind of have to use that as the basis of the definition of what it is. In the white paper, there's no genesis block, there's no chain, there's no specific rules. Okay, there's nothing that we would use to be able to define what we call BTC today, right? All there is in the white paper is a series of concepts and explanations behind those concepts. Very thin, actually. So from that, you can at least my definition that I use for Bitcoin is not the chain, the history, the genesis block. It's a set of concepts that Satoshi defined, which means it's a class of cryptocurrencies. For example, Litecoin is every bit as much a Bitcoin as BTC, right? There's really no distinction. If you look at the white paper, you won't find any difference. So it's just an example. So it's a class of cryptocurrencies. It's a confirmation market. These set of cryptocurrencies share a common security model that are defined by the white paper. So this complex graphic I've got here for you, you see miners and merchants. So every market has people who are buying and people who are selling. Actually, it really doesn't. It has two parties that are trading, right? But trading one thing, trading another thing. Okay, so in the case of Bitcoin, what Satoshi created was a market for people to sell confirmations and people to buy those confirmations. So it's a free market, right? This is done voluntarily. Nobody's compelled to do anything in Bitcoin. They don't have to participate. Nobody controls it. So any questions on the complex market slide there? All right. I try to keep things really simple. James gets a lot more it's the complexity of the graphics. I'm not too good with that stuff. Next. Okay, so what's the value proposition of Bitcoin? Why is it important? Why does anybody care? Like, we can do cool stuff. We can program money. We can send money quickly. We can avoid changes to the money. All these cool things. But what's that really all about? Right? It's about making things cheaper for people. Otherwise, if you can't do these things, it's more complicated, it's more expensive. So the value proposition for Bitcoin really comes down to eliminating the tax on money. Well, not eliminating it, minimizing it, making it as small as possible. Sorry, I knew I'm going to do that. All right. So the things that people imagine, make Bitcoin interesting, like programmable money, are really cool, but it's not required that we have something like Bitcoin to do programmable money. I mean, PayPal's a programmable money. I worked on that for a couple of years, programming PayPal. It's horrible, but it's horrible because state controls on the money. Right? There's so many things that have to be done. Chargebacks is like the one obvious example. You got to deal with all that nonsense. So you got to deal with foreign exchange controls. You got to deal with like crossing borders. It's the control of the money by the state that makes it impossible to do those things that we imagine Bitcoin can do. Well, Bitcoin can do it because it's not subject to those controls. The question is, how does it remain free of those controls, right? So ultimately, the value proposition that we're talking about with Bitcoin is minimizing what I call the money tax, direct taxation. In other words, taxing your transactions. If you can't see them, they're harder to tax. So it minimizes that ability of the state to tax. Monetary inflation, which most people in Bitcoin understand as not allowing a rule change to print new money. Foreign exchange controls, restricting transfers across borders, charging for them, regulatory controls in general, and financial surveillance are all aspects of the money tax, right? It's an increased cost of using money. So Bitcoin aims to minimize that. But it can't eliminate the state, tax, or banking, right? It never will do that. But hopefully it results in more transparent taxation, and it forces taxes to move into kind of a different model. Anyway, so in my similar complex graphic here, you have the state and the market, which is the previous slide, right? The market is merchants and miners working together to like all markets do, right? People buying, people selling, trading voluntarily to accomplish something. And the market has to defend itself from the state. That's really what Bitcoin's all about. So the state attacks every market. There's no market that you could name that is not taxed or regulated, controlled in various ways, or prohibited. And through control, the state extracts tax. And so Bitcoin is trying to eliminate or minimize the control to minimize the tax. Okay. I had a bunch of notes on these. I haven't looked at this slide since Japan, so I'm sorry. I'm probably missing a whole bunch of stuff I want to talk about, but it usually comes out in the questions. Okay, so this is a whole topic that I've written called the other means principle. This one slide covers it. It's a fairly lengthy topic, but this is where the bulk of the discussion ends up. Because it's easiest to give kind of an example to work through how Bitcoin is expected to evolve, to really understand how it defends itself, or how people defend it from the state. So, excuse me. So I cooked up these 4 phases: honeymoon, black market, competition, and surrender, based on my understanding of the code and reading of the white paper. If you just do nothing but read the white paper, you can see all these 4 phases in aspects of the discussion in the paper. First of all, you have to assume that before there's Bitcoin, and then there is, day one of Satoshi mining in his basement, nobody cares, nobody's attacking it. And at some point, it may transition to something else. Well, we know that's anticipated, because otherwise there's no need for a security model, right? So there's this honeymoon phase where nobody cares, and then there's a point at which people start to care, and then the security model starts to matter. So you can see those two phases pretty easily. So in the honeymoon phase, which is where we are now, Bitcoin's not having enough of an impact for anybody to care. I actually sat in at Oxford a few months ago, and I don't usually go to blockchain-y things, but I got invited for other reasons, and so I was just sitting there. It was a lot of regulators. It was like, you know, top regulators from the EU, ECB, whatever, and they were sitting on these panels. And it was fascinating to watch and listen to them talk about it. And they said and I wrote this up before that. This is exactly what they were saying. It's not important enough for us. We don't care. We're just kind of keeping an eye on it. And that it's truly very, very small in their eyes and in reality. So what would having an impact be? When you look at the value proposition, having an impact means it's impacting tax revenues. It's not doing that right now. So nobody cares. So maybe it stays there forever, and we can have, you know, all kinds of centralized systems that never are tested, and everybody thinks it works great, but you wouldn't know. So at some point, the state decides, and this is basically what they said, at some point the state decides, wow, this is starting to actually hurt, you know, our revenues, our ability to enforce this, that, and the other thing. This, you know, money laundering term gets thrown around quite a bit when lack of enforcement surfaces. So the easiest thing for the state to do, which they will do if we move into this phase, is just to outlaw it. Just say, no, this is criminal money laundering. You can't do this. People say, well, they can't do that because it's too popular. It's nonsense. They outlawed gold, right? The United States, they seized people's gold and made it illegal to transact in gold or gold futures until gold was no longer relevant because it was not an electronic money, which was much more recent. So about 50 years of gold prohibition. So anyway, the easiest thing for the state to do is just, you know, say you know, you can't do this. It's a crime, and which would likely be coupled with something, you know, I refer to as FedCoin, which is an alternative, or some slight modifications to Bitcoin. So instead of saying it's just banned, just say like, well, it's okay as long as you do this. And I think my next slides I'll talk about FedCoin. It's a good way to think through the problem. It's just a thought experiment. Okay, so let's just say mining and accepting Bitcoin is banned. Then what happens? Bitcoin starts actually doing what it's supposed to do, right? It's supposed to survive that. That's the whole point. So people can mine, but they can't mine openly in big industrial warehouses, right? Because that's illegal. So what do? They just mine small scale. Yeah.
Could you say that's already started in China with the ban?
Not really, no. I mean, there's bans on exchanges, I think, right? They're still mining. So exchanges aren't even part of Bitcoin. Exchange is just a trade of Bitcoin for money, for other money, right? So it's just the prohibition of a narrow slice of trade of Bitcoin and other stuff. But Bitcoin consists of merchanting and mining, right? There's merchants who are basically, they're people who accept Bitcoin and trade it for stuff, and they're the ones who validate in a way that matters, right? If you try to give me your Bitcoin and I don't give you the stuff, then your Bitcoin's worthless, which means I'm enforcing my rules. So that's merchanting. Mining is taking a set of transactions and confirming them. And if you censor transactions, you know, you're having an impact on people's ability to use the money. So these two aspects of the coin are independent, right? Merchanting and mining. Each side of the system, merchants and miners, defend their own aspect. Just like a coffee shop, you know, they protect the coffee and you protect your wallet, right? And you go in and you buy, you trade, but you're defending your half of the security model. So miners are still out there mining, and they're, you know, that half of the security model is working, and still people are still out there trading the stuff for Bitcoin. It's just that in some parts of the world, some aspects of that trade have been pushed offshore. In China, right? Exchanges are pushed offshore. So it is a little tiny piece of it, but and there's not, you know, it's an interesting question because it's never going to be complete, right? There's going to be a comprehensive ban everywhere in the world, and that's not true with anything that's banned, right? Drugs or prostitution or gambling or anything. It's always little spotty little things, but basically what happens is when these prohibitions unfold, you have a white market and you have a black market, right? And so people say, well, you know, Iran, they might not ban it. great. They're just part of the black market, right? Just like they are now, right? They're not part of the financial system. They're considered a rogue state, or, you know, take North Korea or whoever, right? So it doesn't matter that it's a country. It's just a chunk of the black market. Anyway, so you'll have this kind of white market, black market aspect right there, and the question is, can Bitcoin survive? Can it be useful? Yeah, it's designed to be useful under the situation where it's not allowed. I mean, think about it otherwise. If it only worked if it was allowed, it's just regular money like every other money, right? Because people would basically have to accept every prohibition, every constraint that state wanted to put on it.
Maybe this is a bit off the wall, but couldn't you almost argue that it was banned before it was created? Because, I mean, the only reason it was created was because things like e-gold and Liberty Reserve suffered the exact kind of damage you were talking about.
The creation of it...
The ban was already there. It's just that they've actually gone backwards. The state's actually gone backwards. And it's just sort of pretending it's okay with Bitcoin. Well, it's not at all, but it doesn't know how to ban it. Exactly.
It doesn't know how yet. It's more difficult to anticipate how to do it, but it's certainly not difficult to imagine the state just coming out and saying, well, okay, enough is enough. This is having a major impact, and so it's either having a major impact, and they'll just simply say it's illegal, or it's not having an impact, and it's not having an impact, right? So Bitcoin is certainly designed anticipates itself as a black market. Now, to me, this is fairly straightforward. You can just infer this from the fact that it exists, like you said. But it tends to be a fairly controversial subject with some people because they imagine they're building these big white market, services, exchanges, whatever, that are not able to withstand a simple, trivial, legislative attack.
If you go to bitlegal.io or some similar websites, I think you see like the world map and the countries are like colored to like whatever.
Different levels of regulation and control, yeah.
Said about the state of Bitcoin, and it's mostly green. And if you go back 5 years ago, I would have never guessed that.
It's not having much of an impact today. That's the problem. Exactly. It's the double-edged sword.
My question is, what time frame do you see for?
I don't ever attempt to project when things happen. That's like, when will the market hit 10,000?
What would be initial warning markers that now most countries are turning from green to maybe yellow and then red?
I don't know, go to the website and look at it. So one thing I never try to do, you can describe how it works and what phases it will go through or stop, you could stop at one of these phases. Predicting when, it's like, predicting when the bubble's gonna pop or something, right? You can't predict when things happen. All you can say is they go through these phases. We could be 100 years in the honeymoon phase. I may never go out of the honeymoon phase, and we may go black market in 2 days. Who knows? So I just don't, to me it's kind of pointless because it's not knowable. This stuff's knowable. I mean, it's absolutely knowable. It's provable from the system. Okay, so moving on from black market. State says, okay, you can't do this stuff. People keep doing it and they get really frustrated. Just like with every other prohibition of peaceful activity, it just continues to happen. And so if they're smart, they figure out, they sit around and they go, what do we do now? Send in the drones, whatever, how are we going to take care of this Bitcoin thing? And then they pull up this video and they say, oh, Eric says we should just mine. And I say that in every one of these videos, like, yeah, it's really simple. So just start mining. And this is a weakness that Bitcoin has. It can be centrally attacked. In one place on the planet, it can be taken down with enough hash power. So state-sponsored mining attack, it's your basic 51% attack. What prevents that from happening? How does Bitcoin guard against that? I hear all kinds of crazy answers for this, but.
Changing percentage.
Okay, so now your coin just got smaller and the state just keeps doing it. And you do it again and again and again, now you have nothing.
I think
right.
You defend against it by the fact that states aren't going to do it. I know maybe it's a controversial opinion, but I just cannot see any scenario in which a bureaucratic state
honeymoon phase. You're just saying it'll stay in the honeymoon phase. They won't care.
No, I'm not saying they won't care, but I'm saying I don't know. Can you really imagine the US government? We're going to set up a mining system
absolutely.
To kill Bitcoin.
They set up huge divisions of the military to go out and take on the drug war. Yes, I absolutely can.
Different classes of stupid things. Why? It just doesn't sit well with
You're talking to somebody who was, U.S. government, military for 10 years. I taught tactics. I know how they think and how they work, and that's absolutely. Don't assume the state is stupid or inept or incapable or lazy. They just have different motivations, right? Right now, there's just no motivation to do anything. It's all political, right? Like, what political points am I going to get from banning this thing? Nothing. But all of a sudden, if we're going broke because we're not getting tax revenue, now it matters. So, the creative solutions I saw to difficult military problems kind of boggle the mind. The insane things that will be done if necessary. So yeah, don't. That's just it's not provable. You can't. In other words, your security model can't be you assume your enemy will not attack you, right? That's basically that's what we're saying. That.
To get the hardware, I mean, like realistically, if they want to do it now,
Can you get it?
A lot of resources, like unlimited, but.
Can you get it?
What?
Can you get the hardware to mine?
I don't know.
Can anybody? If anybody can get it, anybody can get it, and the state is anybody. And they can get it without you knowing because mining is anonymous. You don't have to sign, put a little piece of text in your mining block that says, I mine this block. It's anonymous by design. It has to be anonymous for people to be able to do it covertly. So by design, the state can not only get what it needs to mine, but it can mine. Otherwise, nobody else could do it covertly.
They can also confiscate existing mining.
Absolutely. They have the advantage in being able to use the guns to go out and take down the mines and co-opt them. But it doesn't really matter from a theoretical standpoint, right? They can still just go out and take a bunch of tax revenue and build a bunch of factories. I mean, Christ, they built a nuclear bomb. Do you ever looked at the scope of that project? It's unbelievable. And it was only a couple years. I mean, if anybody thinks that the U.S. or whatever government can't go out and do some mining, with some off-the-shelf hardware, after what they did to build the first nuclear weapons, or go to the moon, it's freaking ridiculous.
Focusing on capability, it's more subtle than that. It's about motivation.
Motivation. You're going back to the same question. They just won't do it.
No, I'm not saying I'm saying that the complexity of the motivations of large groups of people.
Okay, but that's a political question. What you're saying is that politically, it's difficult.
Yes, that's
But if you're relying on politics as a defense, you're back to the status quo. Because we have politics as a defense of the euro, the dollar, the pound. And what do we have? We have paper money. We have electronic money that's entirely regulated, tax controlled, right?
Having political incompetence will be the defense, not political.
Bitcoin will not make politicians competent, right? Bitcoin will not change the political world. So there's no evidence to that effect.
There's evidence of incompetence right now, is my point.
Absolutely. And that incompetence is the status quo. It's what's given us what we have. And if we rely on that, that's what we'll have. Yeah. So, I mean, you can assume that the attacker is somehow incapable of attacking you, but that's not a defense. It's an assumption, right? And the assumption basically means you won't move from, say, if they won't mine, you just won't move from black market competition. You'll stay in black market. There'll be no mining competition, and that's fine. That's possible. I'm not saying that the state will absolutely do this. I'm saying that it's anticipated by the security model. Satoshi specifically talks about this attack in the white paper, right? Once you get to the point where, okay, I can operate covertly, we can operate without identity, which he's very specific about, right? There's no identity. There's no need for permission to get the block data. There's no need for permission to mine. There's no need for permission to transact. It's all doable covertly, privately. So that anticipates that it's a black market. It doesn't need permission. So, then you move on to, okay, then what happens when somebody decides to get enough hash power to be able to control confirmation? Well, Satoshi never comes out and says, well, this is about the state, right? I mean, he implies it strongly, but he really doesn't need to go there. But it doesn't matter what actor it is. If some actor who has enough resources to come along and do this, they can do it. So the question is, what stops that, aside from lack of motivation? If there's motivation, how does Bitcoin defend itself from a 51% attack?
Peace?
Peace?
Fees.
Fees. You read my stuff. Yeah. So people go, fees? How do fees do that, right? So, all right. So the way it works is as Bitcoin, as somebody starts censoring transactions, so it's not accepting for confirmation certain undesirable transactions, right? So now transactions are being censored. What happens to those transactions? Fees rise on them because they're not getting confirmed. Even if nobody knows what's happening, you put your transactions in, they're not getting confirmed, you start raising your fees, and then they start getting confirmed. Okay, well, some time goes by and none of these transactions are getting confirmed, but there's all these higher fees out there, right? Fees have gone up on these, but not the other ones because they're getting confirmed. So what happens when there's this big pool of fees out there that nobody's taking? It creates opportunity, right? Money out there for somebody to go out and mine them illegally, because the presumption is that we've moved from black market to competition. It's illegal, it's more costly than it would have been otherwise, but fees are rising on the unauthorized transactions, and they're not rising on the other transactions. So there's this disparity called the fee differential, right? Fees getting higher on banned transactions. So that means higher hash rate more hash rate is incented by the presence of those fees. So hash power comes on and starts mining those fees, and they get confirmed because now there's more than 50% hash power mining censored transactions. So what does the state have to do to maintain 50%? It's not taking the higher fee transactions. It has to subsidize its operations. It has to increase its hash rate without being compensated for that increase, which means now it's operating at a loss. So basically, the reason fees matter is because you can pay the non-censoring miners to mine the transactions, and the censor doesn't get paid. You can't do that with an inflation-only compensation, right? You can't do that with subsidy. Everybody gets paid the same amount. It doesn't matter whether you take the censored transactions or not. So it's essential that to be Bitcoin, to follow this security model, that you have fees as the basis. I mean, it doesn't matter how much of the basis it is, because you could have any amount of subsidy. That doesn't matter at all. All that matters is the fee aspect, which will rise to create this disparity, and it will cause the state or the censor, I'll get in just a second, it will cause the state or the censor to have to operate at a loss. So why do we assume the state is the attacker? Because the state is the only entity that can perpetually operate at a loss, right? Nobody else can do that. Doesn't matter how big you are. You will eventually go out of business. The state will not go out of business. It'll just keep taxing. So the question then becomes, how willing is the state to tax in order to prevent this? Well, that willingness is based on the opportunity cost of its other money no longer working. Right? Dollars don't work. We're going to stop Bitcoin so dollars work again. So if it becomes too expensive to stop Bitcoin, maybe it just gives up. Or maybe it's succeeding and everybody else gives up and stops using Bitcoin. So that's what I call the surrender phase. But when there's a surrender, there's no more hash war going on, what happens? Everything goes back and starts over, right? So you could imagine this cycling between any of these phases, but these are the phases that the security model of Bitcoin and the design anticipates. And what's really interesting is I think Satoshi anticipated most of this, but I don't think he really understood how fees were the basis of censorship resistance. I don't think that was never articulated. I think I'm the first person to articulate it. So I keep trying to get people to understand it. But Satoshi actually said that the only way the community would overcome 51% attack is by people essentially being charitable, right? Going out and mining for the good of the community. That's nonsensical. It contradicts the principles of Bitcoin, which are based on sound economic ideas, right? Where people aren't going to operate against their own self-interest. At least you can't assume they will. Otherwise, it's not provably successful, right? In other words, Bitcoin relies on charity for security. People are just going to operate at a loss forever to overcome the state. No, fees will rise and fees will pay. People that want to use it will end up paying for it. Anyway, that was
your question. The state's got enough hash power, does 51% now. Fees are rising on the other side. Wouldn't that just destroy the value of the commodity that it holds, and therefore the value? Okay,
so you're saying that the increase in fees reduces the utility of the money, right? Yes. Right. I mean, it does. I'm restating what you're saying. So absolutely. So that's why I said Bitcoin does not eliminate the tax. It just attempts to minimize it. Those fees, that fee differential between a free market fee and the fee as the result, basically the fee premium that people are paying is directly a consequence of the tax subsidy that the state is using to keep its hash power up, right? So that tax subsidy creates the increase in cost. And the question is, well, how high can that cost go before the money's just not useful anymore? Right? There is a point where it will become useless because the state is taxing so much to suppress it, it's not usable. So it can't eliminate tax, right? But it has the potential to minimize it. But you can't know how willing the state is to tax.
If you keep on doing reorg on the chain and double spends with 51% tax, then doesn't that destroy the concept of Bitcoin?
As I said, it can be destroyed centrally from somebody who has enough free cash flow to operate a 51% attack against high fee differential.
It's just probabilistic, isn't it? I mean, you just take more confirmations to be...
It's not, the security model is not probabilistic. It's just not knowable. It's not knowable how willing people are to pay higher fees to get their transactions through, and it's not knowable how willing the state is at any given time to tax it, to take its tax revenue and burn it to suppress the coin. There's no way to know that, just like there's no way to know the future price of pork bellies or something, right? This is the essential aspect of price. Prices are not knowable because they're in people's minds. They're based on individual willingness to trade things.
Just curious what your thoughts are about that competition stage and issues of fungibility. So if a Bitcoin isn't a Bitcoin, one Bitcoin is not equal to one Bitcoin in the sense that you've got coins that are illegal coins, whatever it's called. Does that impact what you're saying about the high fees having that incentive, you think, or what's your thoughts on that?
So you're talking about the difference between two types of coins because some transactions are being censored and some are not, but I don't...
To pay to put the illegal transactions through because of the higher fees.
Right.
But if there's issues of fungibility about them being spent...
That is the issue, right? I mean, you have to pay a higher fee to get them through, but otherwise they're the same, right? The increased fee is the thing that makes it different. Somebody can, well, let's move on to the next slide. I think I'm starting to talk about, I don't remember what's on all the slides, but, okay, yeah, exactly. I'm starting to talk about like what's FedCoin, and maybe we should talk a little bit about that, cover some of that ground. I think I only have a couple more slides. So FedCoin would be what the feds, like in the US anyway, would propose as a safe alternative, and absolutely going to use that word safe, to this money laundering system that we've created. So there's only two aspects of Bitcoin that make it unattractive to the state. There's the loss of inflation tax, seigniorage, and transaction transparency. They want to be able to see what's happening with every transaction, and they want to be able to create money for it themselves. There's nothing else about Bitcoin that gives the state any heartburn.
Censorship?
That's transaction transparency.
Oh, that's transparency. But
Yeah.
there's a difference between...
No, if I can see what you're doing,
yeah.
I can enforce stuff on you.
No, but some people see my Bitcoin transactions, but they can't stop them.
But the state can. If the state can see what you're doing, it can just go and arrest you, right? So transaction transparency gives them the power to do whatever they want. If they can't see what's happening, now it's black, it's dark, right? So transaction transparency is the source of censorship because now I can see you're doing this and you're doing that. I can authorize you and not authorize you. So once I have the ability to censor, I can compel transparency. I can compel every transaction be signed by me, and hey, you have to get permission from me to get it in. Just like the SWIFT system or any other aspect of the current financial system, right? Is you can't participate without permission, and the way you get permission is by surrendering your identity and your I just went over and I did a cash exchange over at the, I don't know, Thompson, whatever. And they want to know what I'm going to use it for. And I'm like, so I got to give them passport, driver's license, address, fill out a form. That's them using their ability to censor. I can't do it unless I get their permission to obtain that information from me and therefore to extract whatever other tax they want from me to prevent me from doing whatever I'm not supposed to be doing. Okay, so those are the two things. And what's interesting is seigniorage is prevented by preventing rule changes, right? Preventing the coin from changing. Merchants are the ones that defend against that. It's completely separate from transaction transparency. Transaction transparency is a function of mining. What transactions get confirmed is controlled entirely by miners, right? So these are two completely separate aspects of the security model, and each aspect controls one thing that the state cares about, right? I just find it very interesting. It's a very elegant system, right? You have these two entities, miners and merchants. One is guarding one thing, one is guarding the other thing. They're trading together cooperatively to defend the system against outsiders. And most people's understanding of Bitcoin is completely different than that, right? I'm trying to remember the name of this thing that Honey Badger, they want to have a panel on who has the most controversial ideas, or the ideas that get rejected the most often. And I'm like, I don't even know where to start. Like, most of my ideas, people think I'm nuts, but to me, it's really simple. It's not, miners aren't bad guys, merchants aren't bad guys. They're cooperating voluntarily, and nobody's compelling anybody to do anything. It's the state that we're defending against. So the state wants to, what's that?
Sorry to interrupt. That's a good question. Just to clarify, are you saying that the state finds Bitcoin to be unattractive because it's anonymous or transparent?
There's lack of transaction transparency. The state can't see. I know the wording's a little bit complicated or a little bit obtuse, but yeah, so they want inflation and they want to be able to see everything, right? Okay, so getting two changes to Bitcoin, now it wouldn't be Bitcoin, right? But if we make these two changes, so the state comes along and says, well, this is illegal money laundering, but if we go to Coinbase, we go to all the big miners, we go to all the big online merchants, and we say, if you do these things, you're okay, they will do them, or they will be out of business, or in jail, right? So they don't have a choice. So there will be at that point this Fed coin, and then Bitcoin will keep doing its thing as a different coin. And we've already seen these kind of splits happen, but this will be a split compelled by the state. The state will say, I'm not banning Bitcoin. I just want these changes to make it safe. And absolutely, that's the way they will do it. Okay, so conceptually, how would you do that as the state? You would say, I want to be able to sign every transaction, or it can't enter the system. That's how I get transaction transparency. You have to come to me to get my signature, and then you can submit your transaction. So think of it as a signing process. And then what about inflation? What if I just have the ability, using my private key as the state, to create new units, like kind of like a Coinbase transaction, right? Then I'm all set. I have monetary policy, which means I can create new money and then sign it to myself. And I can prevent anybody from doing anything without my permission, so I can see everything's happening. So with those two changes, it's the perfect money: inflation and censorship. So only merchants can reject inflation, and only miners can reject censorship, right? How does a miner reject censorship? They take the censored transactions. They say, I'll take the transactions without the signatures. I'll do that illegal thing because the fees are higher. That's why they'll do it. Why will merchants do it? Because they want to be able to trade with real Bitcoin money, I guess. I don't know. Why do we do it? But doing those things will be considered criminal money laundering, and you'll end up with like Liberty Reserve if you get busted. But Liberty Reserve is a big centralized system. You know, Ross Ulbricht was running a big centralized system. You get 2 life sentences for doing that kind of stuff. But Bitcoin is designed to be decentralizable. It won't be decentralized unless it's under attack. So when you look at it as a centralized system and you go, it's really not too decentralized, you should expect that. It's much cheaper to run it that way. But assuming that it works that way is a catastrophic, failure of assumptions. Just because we're in the honeymoon phase and it's okay, it's working that way, doesn't mean that if you abandon those principles and make it so it's not decentralizable, when you move into the next phases, it won't work at all.
Merchants includes investors, doesn't it? Like, so if someone buys Bitcoin every week in exchange for their money, they're like a merchant, aren't they? So they would carry.
When you're doing the buying, you're
buying.
not a merchant. The person you're buying the Bitcoin, the person receiving the Bitcoin is the merchant, right?
If you receive Bitcoin and put it in your cold storage wallet for savings.
When you're receiving it, you're a merchant.
You're a merchant.
When you've received it, you were a merchant, right? If you're not being a merchant, you have no say in the consensus rules, okay? Putting it in your cold storage does absolutely nothing to prevent the state from coming and compelling everybody else who's actually merchanting from changing their rules. And then you come back with your money out of cold storage, 20 years later, Rip Van Winkle, and you go, why doesn't my money work? You had no say. You weren't even participating.
If you add to your savings every week or something, then you do have a say.
You're having a say because while you're doing it, it's the person who's selling you the Bitcoin, you're giving them something. What are you giving them? I don't know, cars, trucks, candy bars, dollars. you could refuse to give them what they want in exchange for their Bitcoin. That refusal is where you're enforcing the rules, right? So imagine somebody comes along with their bad coin, their inflation coin, their Fed coin, and they say, I would like to buy some stuff from you guys. And everybody says, oh, it's not money. It's no good. Okay, so by doing that, you're all refusing the change. If they put a gun to your head and they say, you really should take this money and take this rule change, then you probably will. So that's where the defense of Bitcoin comes, from refusing that demand at gunpoint. Right? Really, it's what it comes down to. How do you do that? You do it by hiding. And that's why decentralizability matters. You can't hide if you're large scale. Okay, it's not anything more than that. It just gives you the ability to act anonymously. Okay, so accepting these changes eliminates the value proposition, so Bitcoin would not exist. Go ahead and move the next one. Next slide. Okay, so this is just summing it up. Okay, principles of cryptodynamics. Security force is entirely human by nature. It's those people resisting, people saying, I'm going to mine these transactions even though it's illegal because they have higher fees and I want that money. Or I'm going to not accept your bad Bitcoin because I don't want to be stuck with the bad money, right? Those are human actions. They're real force. They're violent actions when it comes right down to it. That's what I mean by dynamics. I don't mean there's some cryptography that secures the money. That's not true, right? It's like saying guns, secure your house. They don't. You do when you pick them up and point them at somebody. All right? The metal, the springs, the gunpowder, it doesn't do anything. So it's the same with Bitcoin. It's not the cryptography that makes it work in terms of security. So people must act to secure anything, including Bitcoin. We can only expect people to act in an economically rational manner, which means, again, they're not going to charitably support Bitcoin. They're going to do it in their self-interest. And so we have these three principles: risk sharing, energy sinking, and power regulating. Risk sharing is the fact that every merchant, every miner can take a little piece of the risk. They don't have to take all of it. These are all separate topics I've written, risk sharing. Energy sinking is the idea that Bitcoin has to consume energy. So it has to be we call proof of work, not proof of stake. And there really are, those are the only two types of proofs there are. There is external proof and internal proof. Proof of something that's not in the chain or something that is in the chain. Bitcoin has to be secured through external, with an external proof, which always reduces to work. Everything you could do externally can be done using energy. Energy is not reducible. So if you don't sink energy into the system, what you have a proof of stake system. It's a function of what's already on the chain. It's a function of the chain history. So what happens in a proof of stake system when the censor gets sufficient stake? There's no way to get them out. You can't raise fees to push them out. You can't even transact. They own it, right? So with proof of work, you can always add more energy. It's always possible to produce more energy to reduce the censor's proportion down to below 50%. So proof of stake does not have that capability, which means a proof of stake coin is not a Bitcoin. It doesn't follow the principles that are laid out that secure Bitcoin. And it's on its face not securable against censorship. Okay, power regulating is the idea I talked about, where power, I mean human power, right? Force that people have, the power that the state has against the power of the free market is regulated by fees. Right? People have the option to pay a higher fee. The state has the option to increase taxes and subsidize its loss. So this regulation, this balance between them has to exist. So what I'm saying in this third principle is basically it has to be fee-based, right? So it has to be, one other way to think of these three principles is it has to be decentralizable, anonymous. You have to be able to do it covertly. That's the first one. Energy sinking, it has to be proof of work. It has to be external energy so you can always add more to push out the censor. And it has to be fee-based so that you can increase the fees on your illicit transactions to incent more power to come in and operate covertly, right? These three principles build on each other. Okay. Okay, so I'm because of discussions and questions, I'm getting a little long. These are just going over the three things I just discussed, I think. Okay. Any questions? I'm just going to move on. I've already discussed that. This is just going to summarize those three principles: energy sinking and power regulating. There's a lot of text here because I did this in Japan. There was some non-English speakers, and I wanted them to have the benefit of the full translation. So, but it's basically what I just talked about in those three things. Next one. Okay, so I think this is the last slide. So cryptodynamic security is what defines Bitcoin. Is these three principles that Satoshi laid out in the white paper with the motivation of the phases that I kind of elicit from the white paper. If a coin does those three things, it's a Bitcoin. It might be a bad one. I mean, it might have massive blocks that are not really very good at covert mining, right? Is 1 meg perfect? I don't know, but these are arbitrary choices. And so you can be a better or a worse one, but you're still a Bitcoin. Like I said, Litecoin's a Bitcoin. There's a lot of Bitcoins out there, and there's a lot of things that aren't. Proof of stake coins are not Bitcoins. Inflation-only coins are not Bitcoins. Chia, by the way, it's like, you've heard of Chia, the thing we're going to use, hard drive space. It's just proof of work, so it's a Bitcoin. It's just, I think, kind of a silly one because it's not achieving what it sets out to achieve, because it's naively thinking it can reduce energy costs, but it can't. Different topic. Okay, so another idea you can draw from this: utility is not assured. The benefit must exceed the cost. And it's not guaranteed that Bitcoin is going to work. That it has to be what your point was, right? It might become too costly and not be worth it anymore. People might not use it. People secure Bitcoin by assuming personal risk, right? Crypto's not doing it. It's the people that are doing it. If people are not willing to take the risk, it won't be secure. And this one I like, core development is about disadvantaging the state. So when we talk about core devs, we're talking about people like us that work on the Bitcoin or Bitcoin Core or other versions of software that basically implements a node wallet functionality, right? The essentials, the ability to merchant, the ability to mine. And what we're doing is we're always trying to improve anonymity, right? Risk sharing principle. We're trying to make it possible to mine more fairly, right? Because there's a premium to being a large miner, which advantages the state. We're trying to always disadvantage the state. So the best way to think about what core development is, in my mind. Okay. All right. That's it. If there's okay. Good.
So one question I have is about the fees which are supposed to incentivize, but what happens if the state have 51% of the network and they can just orphan the blocks which aren't censoring, and then the miners will basically lose the money even if they mine the block?
Only if the state can maintain 50%.
Yeah.
Right, so if fees rise enough, more hash power comes in to mine those illicit transactions. Hash power rises on the free market side, which pushes state below 50%. So you may in this situation where it's going back and forth, back in big reorgs, right? It may become disruptive and may not work anymore. But then all of a sudden, state doesn't need to do it anymore. It stops. Why would it continue to incur a loss, censoring transactions when it's already winning? So eventually, you can imagine us going through cycles where it doesn't work, and then all of a sudden it builds back up again, it works, and I don't know. These are interesting questions. I'm not proposing answers. There's some potential problems here, right? But it's good that we understand what they are and not naively assume that because we're in the honeymoon phase, everything just is secure. Security is never an absolute, right? These are relative concepts.
Yeah, if we reach the point where Bitcoin's important enough that the states would actually try a 51% attack, do you think there could be competition between different states? So if the US is launching a 51% attack, China might also want to have some.
Well, yeah. If you have 30%, 30%, yeah, right? Then no problem. Right? It's not really a problem. So yeah, somebody has to get to 50%. So basically, one collaborative, one group of states, one state, gets there. That's all that matters. If they can't, they can't. It's kind of no longer important.
It would make that state.
I'm sorry. I just want to. I saw him back there. Go ahead.
Would make that state very vulnerable of like going bankrupt as another one would launch an attack as well, and then they would just make their tax money sink.
Yeah. This is Bitcoin produces an interesting dynamic, right? Where people don't have to break out their guns and pitchforks, and go throw Molotov cocktails. They can just go spend a little bit of extra money on fees, and all of a sudden the state is burning capital to try to control these people. and it has to do it by taxing, and there's a disadvantage. So taxing, when the state taxes and it itself consumes the revenue, which you look at Venezuela right now. Maduro, I think yesterday, tried to transfer 1.2 billion US out of Venezuela. It just lays bare the idea that this is just him pocketing this money, right? This is the state, him and his cronies and people he continues to pay, right? So when they have to not spend that money on themselves anymore, like when he doesn't get to keep most of it, he's got to start giving it out to people to keep himself in power. It sucks, right? So there's a disadvantage when the state has to start burning more capital to defend itself, and the consequence for individuals is they're paying a little bit in fees. So it's an interesting dynamic, but it's impossible to say how willing, like how desperate could the state get and really just want to, North Korea, pretty desperate, right? They're just hanging on, right? They'll let things get pretty bad before they surrender. So who knows? You had a question before in the back.
Thanks. Yeah. So you were talking about proof of stake and its comparison to proof of work.
Yeah.
I think it's roughly fair to say that they're both kind of forms of economic security, and they work if you've got huge scale. They don't work if it's small. So I think the idea that to play devil's advocate for proof of stake, I think the idea is no one should be able to buy up 50% of the supply.
How do you stop them?
Because it's just by economics. Their buy will just force the price up massively because they're dragging out coins that don't really want to move, so people will demand a high price.
But the same is true when you're mining at a loss, right? The whole point is you're losing money, right? So if you're driving the price up to get to 50%, but you do it because what are you trying to do? You're trying to kill the coin. And then you do it. It's dead. And it's dead forever, right? That's the issue with proof of stake. Yeah, okay, there's a cost to buying up 50%. There's a cost to competitive mining as well, especially when fees are rising. There's actually no cost to competitive mining when there's no censorship. So being a 50% miner costs you nothing. You're profitable. You're more profitable than the other smaller miners because you're a big miner, and big miners are disproportionately profitable. So I always find it fascinating. People say, oh, it's too expensive to get to 50%. It's like, no, it's profitable to get to 50%, right? So the same thing is true of a stakeholder, right? It's really not a loss to get to that point. But in the case of stake, there is no way to remove the stakeholder who doesn't want to be removed. Right? People say, well, we'll buy his coins. He doesn't want to sell. The whole point is he's trying to prevent you from using the money. Or he doesn't want to confirm your transactions, right? So proof of stake is interesting, but it's just simply not censorship resistant. There's no way to get the censor out if he doesn't want to get out. You just have to start over, create a new money. Just take one more and then let James get started. You haven't asked anything back here.
You said that there's a risk to keeping coins in cold storage for like 20 years.
No, I'm not saying it's a risk. I'm just saying you're not part of the security model.
But if you're running a full node and you refuse to upgrade to an incompatible chain, then that's your security.
Yeah, I could run 100,000 full nodes and refuse to ever upgrade them and have zero impact on the consensus rules. Because I'm not accepting Bitcoin, right? So this is a misconception that people have, and this is actually pretty well understood among core devs especially, right? I've never heard a core dev kind of contradict this position. It's called an economic node. An economic node. So in my glossary, I refer to the economy as the set of all merchants, which is consistent with the idea of an economic node. An economic node is a merchant's node, and a merchant is somebody who's accepting Bitcoin in exchange for something else. And what secures the rules is the refusal of that merchant to accept something that's not Bitcoin because they've used their node to validate it and it's not Bitcoin, so they reject the trade. If you're not rejecting any trades, you just have no impact, right? If everybody else changes their rules, and I've got 10 times the nodes as everybody else, and everybody's taking the bad money, and I'm saying, no, it's bad money. My nodes all say it's bad money. It doesn't mean anything. Okay? So you have to be actually trading, actually not buying, but receiving. Sorry, not.
Yeah.
not spending, receiving Bitcoin, right?
You and everyone else who is doing the same.
It's the set of all merchants who are currently receiving Bitcoin that secure it from rule changes. A saver is not currently receiving Bitcoin, so they're no longer effective in defending it. It's a dynamic process, right? So if Amazon is accepting like every single Bitcoin transaction, they're the only one that has a say.
But there is a dynamic where, like say, take the Bitcoin Cash fork, where suddenly, I don't know if this actually happened, but let's just say a bunch of hodlers, as they call themselves, all sold a ton of it. So they haven't been like doing anything with it up front, but at the point of the fork, the sale action.
What exactly did that do to defend Bitcoin?
Well,
you're talking about a different coin altogether.
It reduced the economic kind of effectiveness of the Bitcoin Cash side, and therefore.
But there's no; these aren't sides. Okay. Bitcoin is Bitcoin, right? Bitcoin Cash is a completely separate money. So me being given some cash because I have Bitcoin and deciding to do something with it has no bearing on the security of Bitcoin and its rules, right? These are just separate concepts. They're just using Bitcoin to bootstrap a new coin.
I was actually saying that people selling Bcash are making Bcash less secure.
No, they're not, actually. That's just another fallacy, but I'm trying not to focus on that point, right? They're having no impact on Bitcoin by making Bcash less valuable,
you're
right?
assuming that Bitcoin exists in a vacuum and Bcash is irrelevant to it, and I'm not assuming that.
Well, as far as I'm concerned, if Bcash is a better money and it succeeds, I don't care. Yeah, sure. Who cares, right? Sure, the point is that we want one of these things to work. But problem number one with this theory is it's irrelevant to Bitcoin if some other coin does well, right? It doesn't matter. And if it's another Bitcoin, it's great, fine, it's better, right? Gresham's law inverse Thier's law, right? So Thier's law says, the inverse of Gresham's law is that in the absence of currency controls, everybody uses the good money. So it doesn't matter to me if there's 100 Bitcoins running around. Eventually they'll consolidate to the one that's best. Which one's the one that's best? Yeah, all things being equal, the one with the bigger network. Okay, great. So I don't worry too much about forks and whatever. But the other fallacy is that if I have some money and I trade it with somebody else, I've made the money worth less. That's nonsense. And I don't know how many times I've had this discussion with people, and eventually they come around because this term dumping has infected people's mind. Dumping is a political concept. It's when the state uses tax revenue to subsidize a product to push into usually another state's market at below cost that the competing market can supply it at. So I didn't say that very well, but that's where specifically, if you look up the term dumping, that's what it means. It's a tax subsidy, right? It's basically the inverse or the opposite of a tariff, right? I raise the cost of something coming in versus I lower the cost of something going out. And yeah, that can have an impact on the market because you're basically taking tax revenue and you're subsidizing this market and you can run out your competitors. And when you have something of your own and you're not being subsidized and you just decide to sell it, it doesn't make it worth less, right? It just means you traded it with somebody else so they have it instead of you having it, and who has it doesn't matter.
But hang on, if I'm selling Bcash in direct exchange for Bitcoin, then I'm a receiver of Bitcoin. So it's not
and somebody else is a receiver of Bitcash.
Yeah.
It's symmetrical, right? All trades are symmetrical, right? So it just means that they've changed hands. A different party holds them. It doesn't mean that value has dropped. It's a trader fallacy.
Can you clarify when you said in the economic note, refusing to accept Bitcoin, a bad Bitcoin? So let's assume
non-Bitcoin, yeah.
Fork happened. You can't refuse a transaction, it just lands up in an address that you control. So what you mean by refusing is they send you the coin because you're selling them some product or whatever. And
you just don't give them the product.
You don't give the product.
Yeah, so they give you the money and you don't give them the product because you say, well, that's not my own money.
Essentially what you're saying is that it's worthless. It's basically
what is the term?
It's about the market price.
Well, what does the term worthless mean? Literally, worth less or worth nothing, right? Something is worth nothing if nobody accepts it. If nobody will take anything for it, it's worth nothing. If nobody took gold in exchange for anything, gold would be absolutely worthless, right? By definition. So if nobody accepts your new coin in exchange for stuff, right? The coin's not worth anything, which...
So what you're saying is that it's essentially whichever coin has the highest price is the one that's the true...
No, No, I mean, if you can't trade it for anything, it has no price in anything else, right? But what I'm saying is that if somebody wants to compel a rule change, like FedCoin rule change, right, where we want to add an inflation rule, and we want everybody to accept this inflation rule, and so we start using this money that has now, it's a fork, right? It's got this inflation rule, and people say, no, I'm not taking that money because it's not money. It doesn't validate, right? So it's not about, yeah, I mean, is the price of that money zero? I mean, if people are taking it, it's worth something, right? But it's not really about which one has the higher price. It's just about the community or the economy of Bitcoin being able to exist, right? If it shrinks down to zero, then there's no Bitcoin. And at that point, it has no price.
So it's a supply and demand balance, the price tends to zero, maybe it's not zero yet, but it's going down.
Yeah, I mean, like look at, to me, price is not, it's a reflection of what's happening, but it's not the important principle, right? The principle is that people are still trading, using the money with the rules that they want to use. And whatever rules they want to use, I don't, to me, it's not that's not the important thing.
But if the price is low enough, then any hobbyist can have like state resources to do an attack.
Yeah. The price being low just means it's low utility. Nobody's using the money, and there's no demand for it, right? Yeah, and Bitcoin has to maintain utility. Bitcoin has to constantly be traded to be useful. Or it's not. If it's useful, it's constantly being traded. Otherwise, it's not being used, and therefore not useful. But Bitcoin has to continuously be transacted, or it has no security model, right? Nobody's defending it, and nobody's validating it in trade. So who's controlling the rule set? The one person who's actually trading. Who's that? I don't know. Coinbase, probably. Right? At that point. All right. We should let James give a chance here, and if anybody has questions at the end, you can see me and or James, and we'll talk some more. All right. Thanks.